Oligarchy. Mm, mm, yeah, so, so, it's a bit of a daily test at this level for the paper structure. Let's find this one. There's a paper structure at this level. Right is coming back to the perfect level. So there's going to be double confidence level. So let's see if we can have the demand for break of the demand for retest, 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 break of the supply of retest, retest, break of the demand for the retest candle. You see that we have a retest there, we have a retest there, we have a retest here, break our structure, and price is coming back here in double confidence for potential sell. So at this level, this is where you should expect a bearish drop in line with the structure which we have here. So let's make it simple and keep this trade as it should be. So what we have here is that as the week market opens tomorrow, we are going to have a continuous flow. We already have a candle rejecting this flow. There's already a rejection on this flow. There is a buy rejection on this one. So sorry, sell rejection. So sell is rejected at this level and it's upswing will bring market to 161. So you definitely see UJ climbing up to 161. We're definitely seeing that. You're definitely gonna see that. And you see here we have an M structure in the month of July 2024. The neckline of this M structure will be tested again, and it also coincide with 160, 464. Should market gets to that level and there is no strong fundamental analysis, there is a very high probability that this area will trigger sell at 160.662, because this is an M structure, a double top structure, and the price, when on a lower time frame, you will find out a retest to this broken structure, especially on this day. You might find it in 15 minutes, you might find it maybe 30 minutes, 1 hour, 4 hours, but there's definitely a retest to the breakout of the neckline of the structure. This is a double top. This is the neckline. So I think what we see here is a classic return to the tester neckline. Since price left, price didn't retest the neckline. So it might technically come back to retest the neckline on trade conference. We have here a break of structure at this level. So save these dates, and we also have here a supply roof. Look at the supply roof. Supply roof 1, supply roof 2, and technically coming back on triple confluence at this level for potential bearish drop. And to also guide you, we have an ascending trend line, which, see, if the market decides on daily to consolidate, one of the things I see here is that the price might want to avoid this level. And at the same time, if we don't have a trigger within a short time, what that means is that price can still want to leverage no matter how sideways the market is moving. Market may be moving sideways, may be moving sideways on multiple times until price comes to this edge where you have an ascending trend line from the month of August. From the month of August, you have an ascending trend line. So this ascending trend line is a dynamic support and also establishing itself as a demand floor for a potential upswing. So if price returns to this ascending trend line, there is a very high probability that it will be respected. So what we want to see is that as buying continues here from a W structure, came from the W structure. So price might return here again to form a W structure before coming to this point. But definitely this remains a roof that you will keep in mind. Keep this roof in mind. So let's see, our charts are too messy so that we can focus on what matters for clarity. So right now what we're having in mind here is this structure. We want to sell in direction. Now the market is building a sell liquidity for takeoff. So it could, after building a sell liquidity at this level, it takes all and turn it to buy. It's also possible. So when market is building a liquidity zone, especially in ascending or descending trend line, when you take your profits, don't get stopped. So you can take your profit and look for potential exits and leave if you can. Leave if you can. Except you cannot. But if you can, you have to come out of it. So you see, it's building liquidity on both sides. But the market is heavily bullish by forming a W structure. A W structure is a reversal price action. Price switching from downtrend to uptrend. So technically, UJ is building up a buy momentum. So for every time price returns, it forms a W structure. So technically, price will continue to upswing. So this is what we see after establishing a roof and a floor. So most likely at the end of the day, price might want to adopt this pattern. If price adopt this pattern, then you have no choice other than to see that price might return back, market might return back, maybe after updating the roof at 161. This is possible. You can see it. So at 161, it touches the neckline of the double top. So if price comes here, then it will be a coincidence at this top where we expect a retest to this double top structure. So this is a double top structure. So if price returns here, you find out that the swing on daily, let us say we're estimating that from now till third, this trade should expire on third. This is my estimate for this level. But let's say we extend it up to seventh, price can still hit this level. So if price comes here, it's a potential sell zone. The most important thing we're looking out for is we need confidence. So on technical, this becomes your new sell zone. So this will be a new sell zone. At this level, you have double confidence, where we are going to cap this resistance between 167.61 and 161.555 as a potential sell zone. So as price makes its way here, this ascending trend line already built up liquidity will act as a resistance to upswing, and we're going to act as resistance to upswing. The both of them will aid, and this is your guiding floor. So even if in a worst case scenario, price will come here, retest this place again, possibly come down, take away the sell liquidity, and turn everybody to a buyer. So this is the case of UJ. So for now, uh, I do not really see much that Japanese yen want to do. The BOJ will really not do much against the United States dollar. I don't think it's going to do much. I don't think it's going to do much. So this is another line to watch. This is an important price action area. I want to have this in mind. This is a daily structure. It's a daily structure. You must keep this structure in mind. Look at what the structure has done. This is also very important to us. And you can see how price can head firmly to this structure. So at this level, we continue to watch it. A breakup from this level will mean that the price will to go down to touch the floor. And when it gets back to the floor, it comes back again to form a double structure, like price has done. So if it breaks out from here, then it's now confirmed that sellers want to come down again, create a double structure and go up again. Now your bias will change if price breaks out from the ascending trend line. The ascending trend line started from September after forming a double structure on daily and price upswing, came down again, formed a double structure upswing. This might be the last double structure, or we might have one more double structure before turning everybody to a buyer. So he's building a buy sell liquidity. He sells from the roof, buy from the floor, sells from the roof, buy from the floor. So in a normal fashion, he's building liquidity from both sides. Now the question is, where will it go? The long-term bias is bullish. So in terms of probability, upswing have greater probability, indicating that a break from the roof is likely, is about 80-70%, where a break from bottom is 40-50%. But let us look at it. Market is dynamic. It is dynamic in the sense that when market makers look at ratio of bets, they may decide to pull liquidity in any direction of their choice. So you might see that at the end of the day, price might return and pull away by doing a normal deviation, which we see all the time. This is a regular deviation. We apply this strategy all the time. Deviation from trend. Deviation from trend is very common where you see price. Let's use the neckline. Let's not use the neckline. So this is the neckline. So let's assume that this is the retest of the neckline. So this is the retest to the neckline. So if price breaks out from here and price upswing, price might decide to come down to this level. And if you look at this level, this is a value structure where we have had sell. So a breakout from this structure have not been retested. So it also makes sense to see that in the future, price will come back to respect this structure. I will change the color to black. So you can also see it. We have here a double top structure, a double top structure breakout. We have here a double top structure, a breakout from a double top structure. Price came here to retest the neckline by a descending trend line. Now we have a breakout from the supply roof. So on technical, price might come back here for a possible retest. So at this level, you might see price breaking here deep into this place for liquidity, then buy. Or it's also possible that this structure might form the foundation for buying. So in that case now, what we might likely see is a situation whereby price will come in this form. So it will come here, dip itself here, where it will have a double complex and create a buy structure. So at this level, that might be the foundation to go back because the market have to drive people. It have to drive people. So first it's going to drive to update the roof. The roof must be updated. The roof is tested one, tested two, tested three. You pick liquidity from the roof and sell down. When it's selling down, a lot of people will be carried away. And when it gets there, it gets stopped here because we have here a double top structure. This is the neckline. A breakout, this is the neckline. A breakout from the neckline came here and retested. Now we have a breakout of the supply rule. Now price did not return here. So price will return here and respect this. So anytime you see price back here, it will coincide with the ascending trend line to become a double confluence. So at this level now, is an opportunity to chairman, Nafa.